Thank you, Rui. Assalamu alaikum. Good morning, good afternoon, and good evening, everyone. Thank you for joining our presentation and analyst briefing session. As Zubair just highlighted, we had uploaded the presentation. I'll just walk you through very high level, but I would rather focus on the Q&A because I can understand, as Zubair said, this is our first quarter for the consolidated results. And of course, there are a lot happening in the world and a lot happening in the our space, especially in the area of AI. So you must be hearing and you must be listening. So would love to answer as many questions as I can. So Rui, why not you just go over very quickly or just and again this quarter we also, if I just give you the summarization of the quarter, this quarter we have a first quarter where we have certain Eid holidays as well in the region. So it's short quarter for the services sector, especially first and second quarter both. So Confiz integration is in the process. We although gotten a court approval, the scheme approval recently, which we have announced. That's why we have delayed our results as well for this quarter, so we can have a first consolidated results versus like sharing the individual results. So that's why we have delayed it for a few weeks. But now we have an approval and the integration is in the process, which we hopeful that by the end of June, all the other activities, which is legal and other, will be closed. And we are aggressively working from Q3, which is July onwards, and how we can optimize and how we can enter from signing up new customers that we have from a Confiz front, as well as increasing the footprint of our business. Okay. Rui, can you're moving the slides? Sorry.
Yeah, I can move the presentation.
You can go through. Let me. Okay.
We have the presentation uploaded on PSX, and we will upload the presentation with the video recording on our website as well. So we thought we can just you can give a update on the Middle East situation and business as well, and then we can jump into Q&A.
Okay. Thank you. So results, of course, you guys can see it, review it, and can ask questions. That's the issue. So I would just give an overview of the business is progressing. We had last year, as I think, if in the director report as well, we have highlighted, we have the strong, all the big clients that we are working. All of them has continuity. There is no issue from that perspective. But as I reflect, as we have reflected and our
Asif, sorry, you're freezing.
As well, due to the recent crisis, which is beyond anyone's control, of course, the certain deal site, like we have, if I can tell you, like we have a lot of letter of awards, but the starting of the project has been a little bit on the slower side. So we are accumulating like the letter of awards and so on and so forth, because customers are.
If I think the voice is freezing a bit, we are not
I
able
think
to.
he's dropped.
Okay. So please bear with us for a few seconds. I think there was some technical glitch. Let's wait for Asif to get back online. Sorry for the inconvenience. just a few more minutes and we will be up. Louis, maybe you can
Yeah, I
take
was.
the first quarter slides, and then in the meanwhile, Asif would join in, so we don't have a break.
So yes, starting with the performance for the first quarter, we closed the quarter at 23 or 24 billion rupees with our EBITDA at 3.9 billion rupees. I will share the detailed financial slides here. So we can see that as compared to the historic quarters, our quarter revenue grew by 33%. And we had a 25% margin in the first quarter. Margin GP also grew by 33%. Operating profit for the quarter was 13%, which grew by 26%. So despite of, we also mentioned it in our director's report that although the rupee was appreciating in this quarter and we had wage inflation without any dollar upside, systems has absorbed the increase in cost and in this quarter and still have shown growth of 26% in the operating profit. So this is the analysis of quarter over quarter, which I have covered in the earlier slide as well. This is an important slide for us where we reflect that 91% of our revenue is in foreign currency. So most of it is USD denominated or currencies which are pegged with USD. 9% of our revenue is in PKR. So currency appreciation then has a negative impact when it's translated into PKR. In terms of cost, 57% of our cost is in PKR and 43% of our cost is in USD. So we have included 2025 in the presentation as well. Full year, I just wanted to show a dispersion slide. Yes. So in the model, you can see now that with the addition of Confiz, we have added a new segment in North America. We have direct access to the market as well. Confiz has a center in Costa Rica, a delivery center in Costa Rica, and USA and Canada. They have entities which are transferred to systems now. So overall, in terms of employee distribution, 79% of the employees are still based out of Pakistan, and the rest are in MEA and the other regions. So we have the standard slides. I think I will hand over to Asif. Asif is online now to cover the business update, and then we'll move to Q&A.
Okay. Okay, Rui, you guys can start, please.
Asif, you want to?
Yes, go ahead. Go ahead, please. You can spell the questions, or
you were providing some update and then your voice was freezing at that point in time. So if you want to cover that a bit,
I will cover in the Q&A because I think Rui has briefed the presentation, so it's good. I think.
Okay. Let's move forward. So let's start on with the Q&A specifically, and I would read out a few questions and you guys can respond over that. So Asif, the first question is, how has the Middle East war and spending cuts will affect company, given that's a significant market? If you can overall dwell on the situation and your assessment of the situation.
Okay. Yeah, that's what I was trying to explain. Middle East, as I said, I was giving a market update that we what the projects we had and the customers we have, there is no slowdown right now, but as the new take, that what new order flow, that the new pipeline that we have created, the closure is a little bit slower side for this quarter. So as we mentioned in director report as well, we have a lag of a quarter from signing perspective, but the run rate that what we are maintaining is there, and it's so far we don't see any downside. From the growth perspective, of course, in the Middle East side, everybody knows what's happening. So everybody's cautious. The customers are cautious in taking the decisions on the newer stuff, but the business continuity is running as usual. So that's why I think from a growth angle perspective, we're heavily focusing on the North America and Europe, where we are getting a lot of new customers as well. And as you can see, our segment is going to improve further on that side of the equation. So of course, currently we have a dependency on Middle East. So Middle East is going with the rough patch for I would say this quarter at least, and hope this situation changes and things will come back on from a signing perspective as well.
Okay. In first quarter 2026, your revenue rose by 32% to $86 million. How much revenue was contributed by Confiz?
Confiz is, as we stated earlier as well, like it's in a percentage term. It's from company perspective, it's roughly about close to 10%.
And I know you've answered this, but if you just want to take it further, how is the guidance for the overall top line growth in CY 26? If we exclude the Confiz impact, is it a 20% sustainable organic growth rate, a safe assumptions for our models?
We never quote the exact numbers, but in of course, our planning, as we always plan for that, unless and until there is some other unforeseen things happen in the geopolitical situation. Rest, yes, we are very confident on the growth trajectory.
Okay. In first quarter CY 2026, gross margin fell to 25.2% from 30.4% in the previous quarter. Could you unpack the primary drivers behind this looking ahead? Where do you see the gross margins normalizing for the remainder of the CY 2026?
Yeah, there are three factors for this. Number one is at least 4 to 5 days, which is roughly, you can say 5%, 5 to 8% of days, number of days is lesser because of Eid and shorter quarter. So of course, cost is same, and if the revenue is 5 to 8% less, of course, it can translate into GP. It's very simple math. That's one. The second is we have annual increment cycle, and whoever lives in Pakistan, they know that inflation is there. Although whatever we say, whatever the percentage, 5% or whatever, 6%, but it's not like that. When it comes to HR, it's inflation adjustment is at least greater than 10% year on year, right? From a salary perspective. So that happened as well, and we have given those raises. And due to the war situation in the region, the fuel prices went up in the March month at least, where, of course, and in this quarter as well, running quarter, because we have this is an incentive to an employee as well. This is also a cost to a company. And of course, fuel prices raise other inflationary adjustments as well, a little bit of other cost as well. So these are the three cost increase perspective. And the fourth angle is, of course, we were expecting not the high devaluation of a rupee, but at least 1 or 2% devaluation was expected. but appreciation happened instead of devaluation. So our real exchange rate is 105.9 or close to 106%. So we are in a situation where inflation is up, cost is rising, currency is appreciating. So it's, of course, for export business and where we have greater than 90% dependence on our dollar. This is not favorable. But I think fundamental business model on a dollar-based business model, which we are confident that we should stick to that and we will continue to grow that dollar-based business. Eventually, things will catch up. If not this quarter, probably next quarter or after. So from like you said, from CY26 perspective, quarter 3 and quarter 4, of course, all these 3-4 variables, which I am assuming, of course, in a big assumption that the current situation of the Middle East will settle, so we can have a greater visibility, all of us. The number of days will be higher, so it improves definitely the GP percentage, what you are reflecting. And also, all the cost increase in the first 2 quarters will be absorbed, and the growth that is coming from our newer geographies and other geographies will start kicking in. So we're confident that it will definitely improve. But if currency keeps appreciating, of course, it will be definitely a blow to the bottom line then, right? If currency keep appreciating to few percentage points, and of course it impacts our margins, our exchange loss from the receivable and multiple things, so which is again beyond our control. So we will not change our business model. We keep to a dollar-based, but if currency appreciates, it's okay for the time being, and we will sustain this time, and hopefully the reality will catch up soon enough.
Okay. I understand. Obviously, in the region, every other currency is depreciating other than Pakistan. So there's hardly one can do anything about it. I share your frustration.
Yeah, we can't. So that's why I'm saying we have to sustain that time with the patience and keep working on the fundamentals, which fundamental doesn't change. I think there will be no business. I think doing business in PKR is not, of course, it's not fragile. So we will continue to export. Our business model is export. That's why we are focusing on America and Europe. There are bigger markets. We didn't have the direct access. So we're very confident that direct access, the market access, and the customers, enterprise customers that Confiz brings is definitely going to help us in growing that market. And we are going to invest more and more. It will be good for the company as well. From a diversification perspective, which you started, of course, when we acquired Confiz and BAT, all of these things, nobody was expecting this regional crisis. We did it last year, right? So timing was perfect. Timing was great. That at least we had those alternatives. Now we have those alternatives as well. So our business mix is slowly and gradually going to be very well diversified as well. While Middle East keep growing, Saudi, we are very hopeful because there is no visa issues, and so Saudi has not frozen as well, like other GCC countries. Their business as usual. So I think Saudi is a bigger economy, larger economy. So that will take over as well, while the other GCC countries are in the limbo.
Okay. Can you basically give a number on the growth on what your expectations are, given the impact of oil prices on the GCC market? So this is a question, another question. Given the impact of the oil prices on the market, what are your expectations for the growth? I think it's mostly for GCC. Hard to tell?
I think it's hard to tell, but I think if oil prices are going up, it's good for these countries. It's all about the volume. It's not about the price, right? What they are going to flow through current geopolitical supply chain disruption is the main thing. the higher price, of course, and if there is no supply chain disruption, it's good for GCC countries. They will spend more money. But if the volume is shrinking and the supply chain disruption is there, then it's, of course, price will not cover up everything, right? So I think, of course, when this is an uncertain situation, nobody can predict. It's very hard to predict. Uh, so I wish I could have a crystal ball to answer that.
So the next question is, what challenges AI will pose to the company's existing market in the next 12 to 14, 24 months? If you can elaborate on that.
Honestly, I'm super bullish on that. This is a game changer. This is a level playing field. And we are very, very excited that we have focused on changing our delivery business model, aligning with the principles, starting an AI delivery factory, creating assets and accelerators which customer needs, especially the data engineering side. So I'm very confident that AI is going to provide a huge uplift, and there will be losers and winners, of course. So if you play it right, you can see it's a lot of opportunities that is going to arise, and because everyone wants to do something in AI, and transitioning from proof of concept to proof of impact, where every CFO is challenging the ROI on AI investment, and they need to get they move away from a use case based approach to impact based approach. So it's a great opportunity, I would say, all around that we can leverage, and it's a level playing field because if we are using Anthropic and OpenAI the same way it has been used in Silicon Valley, right? So you just have to be smarter and you just have to train your people, which we are. So I'm really confident that things will open up more. And there will be more and more work flowing in. Whoever remains agile and vigilant and work with principles, especially the Microsofts of the world, they are investing billions of dollars in this R&D. And when they come up with the new features, customer wants to implement these upgraded versions. And if they want to upgrade, they need partner like us to upgrade and take them to that journey. So we are very confident. AI is, I think, is not the threat, it's an opportunity. Only threat is a geopolitical situation, which is beyond certain control, right?
Okay. Given that the North American market operates at higher margins than other regions, should we expect a positive impact on the consolidated margins going forward as the contribution from North America increases or your revenue mix gets more tilted towards North American markets?
I think we want to do that as well. I think North American market is a big one, and it's attractive. The margins are better if you're directly selling it to the customers. So definitely, but it will take. It's not like again, I said like we just integrating it. There are synergies that needs to be combined, and it takes a little bit of time when you acquire an entity, you merge the culture, everything. So it will happen, but it may take a little bit of time in the quarter 3, quarter 4 timeframe.
So you have, I was also seeing this in the presentation, and there's a question around that. You flagged M&A as a priority. What size of acquisitions are you targeting, and in which geographies or capabilities? Because you've specifically mentioned that the cash flows now from these transactions from the core side is increasing, so you have a greater opportunity around that. If you can elaborate on that.
Yeah, that is our priority in this current time frame where there is a disruption in regional disruption as well as the AI disruption, and gaining the momentum in the Europe and North American side. We need to double down that journey of acquisition because from a diversification perspective, we totally believe that with AI being the level playing field, and with the infrastructure and everything what is coming in Pakistan, resource, talent, everything is there, and we have the base. We have the base. So we can definitely double down on these acquisitions, and we are working aggressively on those. So while we are working and pushing, but I think we are not that company. We truly believe that we do not want to show just the growth by having an inorganic growth. Acquisition growth is a separate target. We have to grow organically in our own business, and then inorganic business has to be on top. That's how our business model is. So if we don't do M&As, say, for example, if we don't find anything, it doesn't mean that we stop growing because we didn't do M&A, right? So that's not our business model. M&A has to be on top. And this is our target. This is our KPIs, that it has to be over and above the growth that what we do it organically with our business, what we have. But yes, that's a priority, and that will remain the priority because this is an ideal time to double down on those geographies where we are weak or we don't have a strong footing, like Europe and America and UK. And the market size is huge. Like even if we get like 0.00001%, it will be huge.
Asif, given how the neighbor operates next door, there's a culture of M&A, I think, all throughout. So we've seen of late that you guys have done 2 acquisitions, and previously there was one before as well. So should we expect the frequency of these transactions would increase now that you've gotten 3 or 4 on board, or it would?
It depends on the size of the transaction. It depends on the size of the transaction. If there are smaller transactions, then yes, there could be many. But if there are larger transactions, then it cannot be many because we have to digest, integrate, and grow, right? So it all depends that whether it's a tuck-in acquisition or it's a good like.
Okay. There is another question. Will AI-driven automation lead to margin expansion, or do you expect increased pricing pressure from clients as AI improve delivery efficiency?
Both ways. It's a double-edged sword, right? So if you have assigned an outcome-based project, which is a fixed price, and if you use AI effectively, you can make, if your GP margin plan was 20%, it could jump to 50%, right? Or 40%. But on the other side, if you are just on a time and material basis, then of course, customer can say that, why wouldn't you do this work instead of 5 people, we do with the 4 people? And when you do that, it's simply, as you rightly said, then you can't just say that, okay, I will fire 1 person without increasing the rate. Then you increase the rate because AI also has a cost. AI is not free. When we are integrating AI into our mix, there is a cost for tokens. And token maxing or token cost also needs to be passed on to the customers as well. So this efficiency doesn't come without the cost. People think that AI is a magic without any cost. Actually, AI also has a cost. And so that's why the cost customer has to absorb. So it doesn't affect too much on the margin dilution. But of course, so that's why now there are 3 business models which is emerging nowadays. Customers are not saying that, okay, and why I'm saying that it's an exciting time, right? Because when the contract ends, there are big Indian companies or neighboring countries, they have, say, for example, or Philippines or whatever, they have 3 years of 5 years of contract signed with a customer. Now, customer is waiting for that contract to end and the RFP gets released in the market. It's like, I can say 8 out of 10, this is the trend. And customer CFO wants to reduce the price. He was paying $1. He wants to pay 80 cents on $1 now. That gives an opportunity to participate at least and show that efficiency, right? Through that. So I think that's mixed behavior, I would say. And that's what we are waiting and enjoying, and we are participating more. That's why more RFPs are coming. Because as soon as the contract ends, the RFP is in the market, right? And you have to compete on price, you have to compete on AI, you have to compete on efficiency. And now customer is not asking, okay, give me 10 people. They're saying, okay, this is my scope of work. Give me the price, right? So here you have a play. And I think it's a big play, right? So I think that's the business model is shifting, and we are working to.
Okay. Asif, there is a question. Indian rupee is depreciating, whereas PKR is stable. And I was looking at the Indian rupee on the chart just a while ago. It was 81 to a dollar around in 2025. It was 84 to a dollar, now roughly around 12-13% of depreciation. While on the flip side, we have appreciated of late. So, how big a pain is that in sourcing new contracts?
It's a pain on the. It's not a new contract. New contract we always make it right because we price it accordingly. We use AI. We do all of these things. New contracts, I'm not worried. But of course, on existing contracts, the cost has gone up and the rupee appreciates. Of course, it's a painful process because customer is not going to increase the price by 12%. It's not happening, right? It's very hard to justify that in today's day and age. So I think eventually it's not our story for export. I think our margins are still in double digits. There are other exporters in the country, their margins are in single digits. And when they're operating in a single digit and currency keep appreciating, their margin will evaporate, right? So I think I'm really hoping that sense will prevail, and at least we will keep at least doing some rational thinking on our economic side as well, which will help our margins as well. So yeah, it's a painful process, and if it continues to go that direction, it will be further painful. There is no two thoughts about it. It's very simple. 1 rupees will make a huge difference. Even just 1 rupee devaluation or appreciation makes a huge difference on our profitability, right? On revenue as well as exchange losses or exchange gain. So I think we have seen that we have been 2.5 years roughly of appreciation cycle. I think that maybe 6 more months of a painful time, then eventually things will ease out.
Okay, there's a question from Nasheed. He's asking, there's a company called Cognition AI that has an AI-based software developer called Devin AI. What impact will tools like this have on human software developers and IT outsourcing companies like systems?
I think, as I illustrated earlier, the custom application development for SME business is gone. That sector is gone. It's a Claude and Cognition. Yeah, there's so many tools, right? Claude Code and all of these things, cursors and everything. It's coding is for building a custom application is very easy now, right? So anyone can do it. So, and for small companies, for larger organization where we operate enterprise systems, that's not easy because they have so many disparate systems. They have ERPs, they have core banking. So here, that's where we operate. There is still a lot. It's not like these tools will do it. If you want to create a mobile app, you want to create an e-commerce app, you want to create a website, you want to create a content, that is very easy. That's what we don't do now, right? We used to do it, but 2-3 years it took us to shift away from custom application development. Our custom application development portfolio is probably less than 10%, right? So, and in custom application development, we do very complex work. So it's not like you just give a prompt and write. Yeah, you can create a small company, large company software using these things, but it's not like for enterprises don't operate so far. And I don't see it's operating or changing because every principle is changing and bringing those tools in their tool set. So we have to use those tools and implement and keep doing. So this is a cycle. I think when I can give you 10 examples, right? When the e-commerce came in, everybody was saying retailers are done. There will be no retail stores left. So it's this is I've seen 10 transformation, but this is the big one. And if you catch it, as I said, it will be great. If you don't catch it, you're done. That's what I say that to my people as well. You are either beginning of your career or you are at the end of your career. So you choose where you want to be.
Okay, retail and CPG is described as the highest growth segment due to the Confiz merger. What is the organic growth rate of retail and CPG, excluding the acquisition effect?
No, we didn't directly before our acquisition. We were not very active in our retail CPG sector. It was our associated company in the US that they were doing a lot in retail CPG, and we were just doing the delivery. So now we have direct customer acquisition for retail CPG, right? So that is a lot different than what we used to do. So we see a lot of opportunities. And again, with the BAT acquisition for GBS, we are now pitching that services to our clients as well. So we are doing a lot of reorg to make sure that we penetrate into those accounts where they are just doing one thing, and with systems being the large company, we can do 10 other things in the similar account. So that is the synergy, and that's why we acquire. We don't acquire for revenue, right? Revenue is like you can say 5% or 20%, it doesn't matter actually. What it matters is the clientele, right? That if you're doing $1 in a customer, can you do $5 or $10 in a customer in a 1 year time frame, right? That is the game changer. If you don't do it, then $1 is the dollar. It doesn't matter, right? So when we are acquiring a company, we are not looking at revenue numbers or a profit numbers. It's the future potential and what we are getting, because we need customers. We need enterprise customers where like these AIs can be the game changer versus AI can be the threat, right? So I think that's the strategy, and I'm very clear on that. I'm very bullish on that as well. But of course, things it's a time it takes to have a launch, because everything is a natural progression, and that's what we are working towards it.
Okay, on a lighter note, I think somebody has seen you yesterday on the local media with the PM. And here the question is, how was your meeting with the PM? What are some of the suggestions you gave and budget reliefs you are expecting for the company and sector? So you gotten already more famous.
I think I will. No, I think I will just. I think it's a good sign that current government and the PM meets with the business community and hear the suggestion pre-budget versus the post-budget, which is good news. At least listening and changing a little bit based on the feedback and input is a good sign as doing it afterwards, right? So I will just stick to our sector. There are a lot of things but definitely if you follow systems, we have FTR regime of 0.25%, which is going to be expired in June 2026. So definitely we want this continuation, and because as you can see, the export numbers are increasing, and that is one of the factors that is very important that needs to continue. And I'm very, very positive that is going to be continued for a good amount of time in the future as well. So that's one suggestion or one thing. There is, of course, a couple of other remote worker versus the taxation in the corporate sector has been discussed as well. There is, if you guys are following export sector, there is a ERF limit extension by the government. My request is that IT sector needs to go get those ERF limits as well, because it's a 6% arbitrage on the rate. And we can definitely benefit by in acquisitions, and if the capital cost is on the lower side in the rupees, I think we can definitely benefit because 6-7% versus 13% or whatever, it's a good delta. And also, if you guys know, we have that rule that we can, if we want to do an acquisition abroad, we can take 50% of our export proceeds without state bank approval. So if we have ERF and we have that kind of a leverage, the growth can be explosive because we need capital to grow. So I think that was the capital allocation, capital formation. And then there were many other, these were the three top, but I have many other suggestions as well in terms of AI, data center, AI sovereign economy, a lot of things Pakistan needs to create their own AI model, defense tech. There's tons of idea, but these were the 3-4 main things. Yeah.
Okay, can you please share how many new enterprise client systems added from the acquisition of Confiz and BAT?
At least I would say many, but at least I would say good 8 to 10.
Okay, and I think BAT you just acquired for the Pakistan geography, right? So are you guys
Yeah, no,
trying to
but we are doing a
penetrate it?
global work.
Okay, but obviously the other areas were acquired, I think, by Accenture. They bought up most of the business. So the idea is that is that acquisition, Confiz has already been discussed at length. The BAT acquisition, is it allowing you to spread your arms, or some details on that side, if that's possible?
I think, yes, first 6 months, we wanted to make sure that there is a lot of inflows coming in. So we want to absorb that inflow. And I think if you guys are following us on a social media, I personally went to the Shared Services Conference, SSON, the largest shared services conference where the GBS, this type of business happened. We attended first time because we didn't have that expertise before. So we had the booth and we had gotten leads and opportunities because now we can showcase ourselves. So it's a new business development. Which I believe we can sell it in our existing customers. And we have a good story to tell now, or a good reference as well, not just a story, and good people and good case study that we are doing this kind of work from Pakistan. So unfortunately, people in the world doesn't know that Pakistan does these type of things, which is the poor branding and marketing as a country we always do. So systems, and we are trying to lead that way and make sure we tell people and our customers that this kind of work also happen in Pakistan. So I've met with so many people who does the location strategies and the consultants who do the consultant and invite parties to the RFP process. So registered Pakistan as a country for operation resilience, and also systems as one of the service provider, because that is really important. So groundwork needs to be done to build all of this, right? It doesn't happen by accident. So you have to build the base. You have to tell people. So we are in that marketing mode. So as I said, like it's everything takes its time, but at least we are in the race now. We were not in the race, so we are in the race. So we will win few. I'm positive. May not be like yesterday, but we will.
Okay. Please share the reason for continued increase in trade debts and how much percentage is from the UAE market.
UAE market is very stable. In the Q1, we didn't have much of a surprising trade debts. Although we had some KSA where there was definitely a slowdown on the collections, but we are catching up a lot in the Q2, and it will be slowed down. There is no doubt in the region. When these things happen, the cash flow people hold, and it's not us, it's everyone. If you can steady the company. But again, their portion in the Middle East is very low, so you might not be able to compare like for like. But definitely, it is if the if it prolongs, the current conflict prolongs, then of course there will be some DSO impact for sure. Not drastic, but there will be some.
Systems GBS, I think we'll go for the last question. Systems GBS has been launched targeting R2R marketing and HR processes. What is the initial pipeline, target markets, and the break-even timeline for this new brand?
Break even, we are already uh, so we it's not break even. It's already a very good business, right? So we are already cash positive and profitable. So it's not a question of break even. We are much ahead of that. Branding, yes, we need to get more business, that you can say. And in the question, if I understand correctly, the pipeline, as I said, that's what we have launched the brand in this conference. We're building the pipeline. It takes time to close because these are the large deals. These are not small deals like a 10 people deal. If it happens like 5, 600,000 people deal, right? So when it happens, it happens. So we expect like 1 or 2 deals, but it has to be 1,000 odd people or 500 odd people deals, right? It's a deal size is bigger when it happens. So so it takes time to close those deals. A deal flow is started, but when it comes, it's big. That's what I'm trying to say, because it's not like 5 people development shop. Nobody operates the GBS for 5, 10 people, right? GBS happens to hundreds of people then, right? So scale comes very quickly, but the cycle of closure is also lengthy. That's why.
Okay, I think there is one last question, but you always tend to skip on that. 9,000 employees, what will be the employee growth rate going forward? Uh,
I
and
think now you should not ask that question. That's an obsolete question. Now in AI age, you have to ask different question. How many people you will reduce and make more money, right?
Okay. And one last question from me is basically, we have seen visa issues, and there are talks on Middle East, UAE markets in specific, and people have been dilly-dallying on that. But certainly there are visa issues. UAE continues to be one of the important market for systems as well. On the flip side, also we have recently signed a mutual defense agreement with Saudis. So, is there a positive uh, d- uh, impact or bearing of that agreement or additional business flow that you think will come through because of that? And are you seeing the negative downside of the visa issues on the business in the UAE, or you are getting it compensated through other geographies or talent pool from other regions like the Egypt market or that can serve that? So, a last comment, and then we will close on that.
No, yeah, I think very good question. I would say it's a very, very thoughtful question because that's what the people dependent and the visa dependence. When you are doing services business, you need people on the ground. But let me give you a color on that. Okay, Saudi, definitely with the defense pact and you guys know, everybody knows, world knows that relationship between two countries is getting better and better. And hopefully, we will see more, not just the MOUs, but real work happening soon in the country with bilateral government to government, defense tech to AI innovation hubs, and a lot of things are going to happen. And we will be, inshallah, beneficiary of this because being the largest IT company and the largest IT Pakistani company in Saudi as well, we will be the beneficiary. And similarly in Qatar, also a lot of positive momentum, lot, right? I can say that. And also now a little bit of Kuwait opening up as well. And over there, the competition is less because not everyone used to go there. So there are positives. And of course, now I come to UAE, which is our largest market from a segment perspective. As I said, uh, we are grateful so far. We have strategic and large customers. None of our customers has shown any change in their behavior or in the work pattern and so on and so forth. Yes, the new deal signature is a little bit slower. From a people perspective, our Middle Eastern entity is truly multinational entity. So if you believe that we have 100% of the people are Pakistani origin, that is not true. 52% of workforce is Pakistani only. It's not like 100%. So we have 48% of our workforce, even today, is multinational, right? So we are not losing business because we cannot send people from Pakistan due to visa issues. Fortunately or unfortunately, there are layoffs in neighboring countries as well. And we are getting good people from everywhere, right? And people are still open to come to work in Dubai as well, right? And so it's not like completely bleak. So we have uncovered, and I'm glad that at least we have like 1,000 people, say for example, we have like 52% and now 48%, and that ratio is going to change as if our visa regime is tightened for a few more months. So we are not one of those companies. We try to navigate. We know how to navigate, and I'm very. My team has done a phenomenal job in navigating that crisis by managing and recruiting people from various geographies. So talent issue anymore, which was my threat a few months or few weeks ago or a few years ago, that where I was mentioning that visa could be the game changer. But yes, it affects us, but it's not like killing us, right? So we are progressing in the direction, and I'm very positive that will not affect the business flow. We'll continue need to do demand generation. We are very bullish on that, and we want to position ourselves as a truly global Pakistani multinational, right? So we're not positioning ourselves as like just Pakistani company. We are proud multinational, right? It's where we recruit people, we do business with the countries in the world, in the 4 continents, and that's going to be the mission going forward.
Okay. On this positive note, on this positive side of the visa issues not having an impact on the workforce that you employ in different geographies. In fact, that is coming out as an opportunity to truly develop a multinational employee workforce. We will call it a close to the session. Thank you, everyone, for joining us for this enlightening session in the wake of the geopolitical turmoil. Thank you, Systems Limited. Thank you, Ruhi. Thank you, Asif. Thank you, Tahir. And thank you, everybody else. If you have any follow-up questions, please feel free to reach out to Insight Securities or Systems Limited for that matter, and we will be happy to assist you. Thank you so much.
Thanks, everyone. Thank you, Zubair.
Thank you.
Sure. Thank you. Thank you.